to the outsiders. So here, in the management wants to know that exact cash position or exact financial position. They want to know that financial position, what amount goes to that particular, that for example, finance department, HR department, marketing department, whatever it may be. How much allocations they have to make, how they have to segregate the money, with the help of rearranging that statement of profit and loss account, and other adjustments also take into part of business. Okay, so they can finalize the all those things. Some some nature of expenses they have shown that P&L account. Again, that add net profit and find out that funds from operation. That means actual amount having by the company. Okay, so this is the basic things. Funds flow statement. Theoretical part you have to go through your textbook. Accounting standard AS3. We should follow that. Okay. Um, See, look at that statement of steps. You can note it down for calculating funds flow statement. Funds flow statement. What are the steps we must follow? Okay, number one. First, we want to prepare the schedule of changes in working capital. Statement showing schedule of changes in working capital. Changes in working capital, it's nothing but what exactly amount having in the hands. See if assets favorable or liability favorable. So assets favorable means, capital appropriations, and that the capital for example current bills receivables, deeds, bills receivable, cash items, other items we have to use for what, no, if any appreciation comparing to previous year and current year, any capital increasing, definitely the asset will be increased, the company having that good working capital, and liability decreasing, the company having good working capital, and vice versa. That the company having unfavorable nature, the management wants to arranging funds for that particular working particular period of time. So they want to make arrangements for fund for what, no, business. So here, no change statement of change in financial position. So what is that? See, a theoretical part is lot of things is there. We You go through it, the textbook less. Okay, sorry. So funds flow statement. We want to prepare the funds flow statement. Step number one: changes in working capital. We want to prepare the changes in working capital. So changes in working capital, current assets minus current liability. You can use the formula for changes in working capital. What is that? Step number one, funds. You put the heading calculation of funds flow statement. We want to prepare the funds flow statement. Definitely, these adjustments we have to do it, right? So, number one, preparation of changes in schedule of changes in working capital. Schedule of changes in working capital means within bracket you can mention that current assets minus current liability. Step number one. If you know that changes in working capital, increasing fund or decreasing fund. So increasing fund or decreasing fund means the company wants the money, or the company can manage the money. If your assets are increasing, no, definitely the company having adequate position, they can arranging their own. If liability increasing, you want to make the payments to outsiders, creditor increase, we are arranging for loans, whatever it may be. So again, insufficient of cash balance. Definitely, the business people wants to get borrowing from outsides, or arranging loans, or arranging any financial things. Okay, the changes in working capital will help you to that increasing working capital or decreasing working capital. Either we need money, or that we adjusted our money in our hands. Okay. Say step number two. 1 minute, sorry.
Sir, please repeat the
Step
step
number
number
two.
one. Step number
You
1
have
to
to
6.
discuss.
Can you
No,
repeat?
step number 2, I will tell it orally. This is theoretical part for your own purpose. You can take something now. Step number 2, preparation for ledger account. This is method you have to preparation for ledger account, both asset side and liability sides. Can you follow what I'm saying? No. So new things you have, no.
So changes in working capital is equal to current asset minus.
Current assets minus current liability. Mr. Rohit, please mute your video. Otherwise, you will all people can lose their network. Rohit Arora. Okay. Yeah. So step number 1, changes in working capital. Schedule of changes in working capital. Within bracket, you can write it current assets minus current liability. You know what we get? Either increasing working capital or decreasing working capital. You can know that for preparation of changes in or schedule of changes in working capital, whether you need fund or we need not be fund, either decrease or increase. Okay, we want to calculate at that. That portion will be covered in that problem oriented. Okay, and the next step, this is new one for you. Preparation of ledger balance. You people know that ledgers, capital account, reserve, general reserve or reserve account, and the profit and loss account. This will be, profit and loss account will be, different concept. Funds from operation will be used, and that any long-term loans, debentures. Okay, so here that ledger balance only for long-term funds, not for a short-term. Your short-term, all short-term will be used in that schedule of changes in working capital. Okay. Once again, I tell you, we want to prepare the funds flow statement. Step number 1, changes in working capital. You have to prepare those changes in working capital equal to current assets, all current assets minus all current liabilities. Okay, the portion 1 is over. Next, you want to prepare the ledger balance. Why? I will tell you later. Step number 2, preparation of ledger balance of balance sheet, like a long-term funds, not a short. Long-term, you can mention that long-term. For example, capital, debentures, reserve and surplus. Okay, and asset side, all fixed assets, investment including investment. Current assets will not become, because all current asset and current liability will be used in the working capital. Okay, so preparation of working capital. If preparation of ledger balance. Preparation of ledger balance. No, if you can note it down. If any balancing figure comes, definitely balancing figure will come. If any balancing figure will come from the ledger balance, transfer to either funds from operation or funds flow statement. Either funds from operation or funds flow statement. Funds flow statement like source side or application side. Okay. So second step, that ledger, when you prepare the ledger balance, if any balancing figure comes, it will be transferred to either profit, that means funds from operation account, or funds flow statement. Funds flow statement having two things, source and application. Okay, step number 2 is over. You please note it down carefully. If you have doubt, ask me. Next, third step number 3, preparation of funds flow statement. Step number 3, we want to prepare the funds flow statement. Prepare the funds flow statement. Prepare the funds flow statement. You have to prepare the funds flow statement. Okay. So third one, 1 minute.
Sir, good evening, sir.
Sir, சொல்லுங்க sir.
Sir, good evening. Sir, admit பண்ணுங்க வராங்க late comers. Good evening, student. Good evening. We'll meet the next week. The same time, you go to join this class the next week. Every week you should join the 8 o'clock classes. 10 minutes before you can join the class. It is a main instruction to all the students. But at the same time, before attend the class, you got to go through this same subject. One day before, you go through this subject and observe the class. And easy to understand this our online class teaching. Okay, it is main instruction to you. After completing this session, all the students are also give thanks to our Dr. Magendran sir. Sir, Magendran sir, I thank personally on behalf of my students. I thank
Yeah,
you.
Okay, sir. Okay, sir.
Thank you.
Okay, thank you, sir.
என்ன காரணம்னா அவங்க அமுதாட்ட எதுன்னு சொன்னேன்
இல்ல, இல்ல.
ஒன் ஆஃப் திஸ் கிரைசிஸ் பீரியட்
Really, sir. இந்த first year MCOM வந்து really, you know, well, என்ன பொறுத்த வரைக்கும் other people
no,
comparing
all the students are also very good student.
நிறைய பேட்சஸ்ல எல்லாரும் பண்ணுவாங்க பட் really they are very good.
வெரி குட் வெரி குட் ரொம்ப தேங்க்ஸ் எங்க ஸ்டூடெண்ட் வந்து எப்பவுமே ஷார்ப்பா இருப்பாங்க ஆமா
ஓகே ஓகே
வெரி பிரில்லியன்ட் ஸ்டூடெண்ட் in our DD students also. Okay, thank you மகேந்திரன் சார் thank you
sir.
நான் அப்புறமா உங்களுக்கு கால் பண்ணி பேசுறேன்.
ஓகேங்க சார், நோ ப்ராப்ளம், பேசலாம். thank you sir.
Thank you student, we will meet next week. Thank you.
Okay, fine. No, okay, step number 2 is over. Step number 3, funds from operation. So funds from operation means either statement model or adjusted P&L account. See, most probably you people can follow adjusted P&L account. This will help you because you can easily get the answer. If statement model, you forgot some things. Okay, so funds from operation is the third step. Within bracket either statement model or profit and loss, adjusted profit and loss account. Okay, adjusted profit account. Just before I'm telling all the ledger balance, no, if any balancing goodwill, general reserve write off, any write off figure will be transferred to which account? Funds from operation account. Okay, step number 3 is over. Step number 4, preparation of funds from operation. Step number 4, preparation of funds from operation. So funds from operation, funds from operation, point take number 1, changes in working capital amount will be transferred. Changes in working capital amount transferred to the funds from operation, number 1. And again, try any amount, cash inflow or outlay, transfer from the funds from operation. Cash inflow means you have the money, this is source, you have to use. Know that cash out lay. Outlay means we need insufficient of cash, we used more funds. Okay, so either cash funds from operation having inflow or outflow. Okay, whatever it may be, you can transfer to funds from operations. Sorry, funds flow statement.
Sir, again
Okay.
repeat fourth point.
Yeah, fourth point. Preparation of funds flow statement. Preparation of funds flow statement. There are two things is there. One is source and another one is application. Source means you have received the inflow of cash. Application means use fund. Make the payment and use of funds. In business, various funds we have used for various purpose. No, so you have to transfer. We will get it in that working problem. You will get that some ideas. So one thing, for funds flow statement, you can transfer decreasing or increasing money from schedule of changes in working capital. Why I'm telling, sometimes we forgot it. That's why. Schedule of changes in working capital amount, you have to transfer, number 1. Second one, funds flow funds from operation. We want to transfer from funds from operation. Funds from operation having inflow or outflow, whatever it may be, inflow or outflow. Inflow is a source, outflow means application. And third, step number 3, if any balance available in ledger, no, capital natures. In any balancing figure available in ledger, capital balance, transfer to funds flow statement. Okay. These are the most important. So when you are going to prepare cash flow or funds flow, you must follow the 4 things. Number 1, only funds flow having 4, cash flow having other things. Funds flow, number 1, you want to prepare the schedule of changes in working capital. Number 2, funds from operation, ledger balance of various capital liabilities and fixed assets. Number 3, preparation of funds from operation. Number 4, prepare funds flow statement. We want to prepare the funds flow statement. Okay. You go through it, theoretical part. See, look at that current assets. You can take the photo. Okay. Current asset. What are the items we want to show in that schedule of changes in working capital? See, yesterday I gave a lot of current assets. Something there, missing. If anything is missing, no. If please look it in the page, you can get that some idea. So cash in funds from operation, we must use the cash balance. In cash from operation, we need not be used cash only. We want to use in that statement only. Okay. Only we will have to discuss fund flow statement. Okay. Cash in hand, cash at bank, bills receivable, sundry debtors, short-term loans and advance, if any given that, like investment, temporary or marketable investment, inventory or stock such as sometimes raw material, work in progress, stores, spares, finished goods. Most probably inventory or stock they have given, not like that raw material, work in progress, stores. Okay, it is a big process. You can write it stock, prepaid expenses, accrued incomes. So these are the items appear in the current asset side. Okay. Next, current liability. You take the current liability. What are the item you want shown that? See, bills payable, sundry creditors, outstanding expenses. Dividend payable means interim dividend. You can mention that interim dividend. Bank overdraft, short-term loans, advance or deposits. Provision, again current assets means that provision for bad and doubtful debts. You please change that name. Provision for bad and doubtful debts. And you can add one more thing, depreciation fund, provision for depreciation fund. Because we are provision for bad and doubtful debts will be shown that asset side. Sometimes it will appear in the liability side. We want to recover some amount, so it treated as a current liabilities. So proposed provision for taxation and the proposed dividend, you please put star because they are having adjustments. So if just I will tell you that document. I will show you. You can take that. Provision for taxation and proposed dividend. You please put a star mark. You have that adjustments. Definitely some adjustments is there. If nothing will be, you can take the current assets. I will tell you. Okay, the part will be over. See, current permanent liability assets. All those assets which are not current assets are termed as a non-current assets. That means, these will be used for preparation of ledger balance. We want to prepare the ledgers. This is not important. You don't worry. So permanent of liability side, no, all the things will be there. We don't need such things. I am skipping. No. Yeah. This is the format for 1 minute. I will reduce that. Okay. This is the format for preparation of schedule of changes in working capital. Same thing, comparative income statement. No. Comparative income statement, the same thing will be there. So schedule of changes in working capital, you put the heading, particulars, previous year, current year. That you can effect on, like, don't put that effect on. Schedule of changes in working capital. If you can use that. Changes in working capital, increase, decrease. Debit, credit, note, don't mention that debit, credit. Increase amount, decrease amount. Okay, increase amount, decrease amount. As usual, current assets and current liabilities. Current assets and current liability. Okay, the format by it you have in your text booklet also. So proposed dividend and provision for taxation, they put star because some adjustments I tell you. Interim dividend is differ from proposed dividend. If interim dividend given in the adjustments, you can show in that P&L account and also funds from operation. That means funds from operation and also funds flow statement. Okay, the thing over. Next, like adjusted P&L account. What does it mean? No, adjusted P&L account means preparation of funds from operation. You can mention that adjusted P&L account. What are the items appear in the adjusted P&L account? Why we have to use that? No, some year ending. No, some figures they have missing. Some items they have omitted. So finally, we want to calculate it to find out that correct fund. To find out that correct fund. See, some expenses or something, transfer from reserve out of profit. So it is not good. As for if we want show in that P&L account, only trading natures. Non-trading nature will not appear in the place. But for tax benefits, the management wants to show that the non-trading items. So, and again, the management wants to know that exact fund having in their own hands. So we again, that again that what the P&L account will be make on readjustments, right? Adjustments. So what are the items appear in the place? Lot of things is there. Only few things will come. Any receivables shown in that credit side, expenses which is not related to the trade and nature, all the thing will be appear. If credit side will come, balancing figure will come, which is called as funds from operations. If debit side, cash outlay, debit side, cash outlay. Okay, I think so. You have a textbook letter in your textbook letter. Some things there. And the next one is funds flow statement. Preparation of funds flow statement like this. See, two things is there. Either you want to prepare the statement model or prepare the traditional method. Okay, funds flow statement for the year. No, source and operation. You please note it down. Issue of shares means if any balance, if your capital, equity share capital, if any balance will come, you can show in that place. New debenture, you can raise loan or whatever it may be. And for comparing current year to previous year, current year amount increase, definitely all the thing will be shown that source of application. And if you know that previous year and current year decrease value, will be shown that is application size. That means cash outflow. Okay. Decrease in working capital, the company have for make the arrangements. They have money. Increasing working capital means Additional payments made. Additionally, they need money for settlement purpose. Okay. So these are the heads you have to cover it. Yeah, another, we want to prepare the statement model. Same method, same procedures, source of funds and application of fund. What are things applied in that above, that traditional method, the same method. See, you can follow anyone. You can follow any one method, either statement model or traditional method. Yeah. Yeah, this is important to note. You people can. Why I'm little bit rushing? No, we want at least covered at least one or three or four problems. We have to. We solve the three or four problems. You will get it the information from that problems. But note down that proposed dividend and provision for taxations. So this is very important note. See, number one, proposed dividend and provision for taxation. You put heading note number one. See, see one number one. Preparation of schedule of changes in working capital. We want to prepare the schedule of changes in working capital. We want to prepare the schedule of changes in working capital. Schedule of changes in working capital. No. We can consider provision for taxation and proposed dividend as a current assets. Okay. See, only preparation of schedule of changes in working capital. Only preparation of schedule of changes in working capital. The proposed dividend and the provision for taxation consider as a current assets. Okay. Can you follow? Note it down, please. Because the adjustments is very important. If you forgot it, definitely you will never get it answers. So easy funds flow and the cash flow is very easy, not the toughest syllabus. So if you want, prepare the schedule of changes in working capital, proposed dividend and provision for taxation will be treated as a current liabilities. Okay. Number two. Number two. Number two, see, note down proposed dividend and provision for taxation. Proposed dividend and provision for taxation given in the particulars. That means given in the balance sheet. Given in the balance sheet. Given in the balance sheet, proposed dividend and provision for taxation given in the balance sheet. Both opening and closing items. That means previous year and current year, right? Both opening balance and the current year. Okay. No adjustments made. That means no adjustments was given. No adjustments was given. Only, once again I tell you, proposed dividend and provision for taxation given in the balance sheet itself. Only, no, nothing will be given in the adjustment. Not the additional information. Nothing will be given the additional information. So how do you treat the proposed dividend and provision for taxation? No, opening balance and the closing balance is there. Opening balance, that opening balance of proposed dividend or provision for taxation. Opening balance of this. Okay. Proposed dividend and the opening balance. The opening balance transfer to application side. Adjustments is no adjustments is given. Only opening balance, closing balance of taxation, provision for taxation, proposed dividend given. No. Opening balance will be transferred to funds flow statement application sites. Okay. Note it down. Opening balance of proposed dividend or provision for taxation, transfer to funds flow statement application side. Okay, application side. Next, closing balance transfer to funds from operation debit side. Okay, can I follow? Anybody have any doubt? Closing balance transfer to funds from operation debit side. Okay. Point number three. If proposed dividend and provision for taxation. Point number 3, proposed dividend and provision for taxation given in the balance sheet and also given in the adjustments. Once again, I tell you, proposed dividend and provision for taxation given in the balance sheet and also given in the adjustments. We must prepare the ledger balance. Just wait, I show you that ledger balance. This is important. Okay. So the ledger balance, you can note it down, that ledger balance I will explain you. If you know that both balancing figure, opening balance, closing balance, and also additional information provided, no. So that time you have to prepare the ledger balance. Okay, these ledger balance you can copy down or no, take a snapshot, whatever it may be, no. So how do you transfer amount, in what amount we are transferred to P&L account and application side? Okay, see, if balance sheet having opening and closing, by balancing figure, no, only provision for taxation there, the same proposed also same. By balance brought down, life always comes by side. By balancing brought down, whatever it may be given in the question, you put that amount. And two closing balance, by balancing two closing balance, whatever it may be. See, this is important. You see, if for example dividend paid or tax paid, whatever may be, you note it down. Dividend paid or tax paid given in the adjustments, not in that paragraph anywhere. No, adjustments. So you have to paid means the thing will be over. We already done it, draw. So these will be shown in only application side. So in two side bank, tax paid or dividend paid. Note it down. In your question papers, question is provision for taxation paid or proposed dividend paid means two tax paid. Bank means cash, make the payment through the bank. Okay. Tax paid or dividend paid. Balancing figure.
Sir, your voice is not audible.
Okay.
Picture also not reflect clearly.
Oh.
Yes, sir.
Everyone having problem.
Now we are able to see, sir.
Sir, it's not clear.
Yeah, if now okay, voice is clear. Yes, okay. Okay, now it's okay.
Okay, sir.
Yes.
Now clearly.
Okay, fine. See, note it down. You know that two paid is over by P&L account. By P&L account, See, sometimes, profit and loss account, they had no mention the provision for taxation made, proposed dividend made. If the made, underline that word, if made is given, no, which is called current year balance, that means current balance. So these will be shown that profit and loss by side by profit and loss account, tax made or proposed dividend made. Next, balancing figure will know bank, the tax paid is comes balancing figure. Opening and the closing will be appear in the balance sheet. We have to transfer it. If in the adjustment itself, no, if adjustments paid means you can put it debit side, balancing will come credit side. If made means you put it credit side and the balancing figure will comes debit side. Okay, it's enough. No, this is most important. We are going through that what preparation of funds from statement. Have any doubt? Please raise your question.
Can I just repeat the last line, sir, which you just mentioned?
Yeah. 1 second, I tell you. Proposed dividend is there. No, see, proposed dividend or taxation balance brought down and the balance carried down will appear in the balance sheet. We have taken from the liability side, opening balance and the closing balance over. Next, if adjustments, additional information, the word provision for taxation made or proposed dividend made or dividend made. If dividend made means definitely you can put it credit side, profit and loss account, dividend made or dividend taxation made. So the balancing figure will appear in the debit side. Debit side means tax paid, proposed dividend paid, the balancing figure. If in the question tax paid, dividend paid means, that balance figure will come in credit side, P&L account. Okay. So the two, one thing, either credit side or debit side. If adjustments, the word paid or made, you please understand that paid means the amount will be appear in that debit side, balancing figure will come credit side. Made means amount will appear in the credit side, the balancing figure will come the debit side. The debit side will be carry forward to application of the funds flow statement. Okay, it's over. Theoretical part will over. And one more things, yeah, previous classes have some doubt. You can note it down this problem. You can take the photo. Try to solve yourself. Can you take it? Yeah, anyone can take interest. You can take photo and share to your group. And this is the solution also. It's the same methods of problem will come in your examinations. 1 minute. Once again, I put it so question because I will go for that next funds from operations. See, look at that. This is the question. Okay, I will go to that solution. See, for preparation of balance sheet, part 1 is over. For addition, take the photo. Number 2. And number 3, calculation. Okay, and number 4 like this. Okay, it's over. Okay, I will go for that our syllabus. Yeah, you look at that problem number 11. Okay, because you have an idea. Just before I may explain the various concepts. See, look at that preparation of schedule or changes in working capital. Schedule of changes in working capital. How do you identify? Comparative statements. Both are same methods. So you are asked to complete a working capital statement from the above details. So underline that the word working capital statements. So what is mean? No, we want to prepare the funds. That schedule of changes in working capital. See, various part of that liabilities and the assets is there. See, 8% debenture, outstanding rent, cash, and the cash at the bank, account payable, machinery, receivables, prepaid commissions, inventory, share premium, equities. See, one thing I tell schedule of changes in working capital means how much amount we need or how much amount we utilized. Okay, either the company having good financial position or not. How do you know that? For example, increasing your asset value, you are favorable, and decreasing the liability, we are favorable. That means the particular year we earn more money and used for that purpose. If vice versa, definitely again we want to arrange money for business. Okay, so how do you prepare that? First, that putting the heading schedule of changes in statement showing schedule of changes in working capital. And as usual, particulars, rupees, that is previous year, rupees current year. And the next column, increase, decrease. I will show you. Amount, you can check it, Yeah, this is the problem. Schedule of changes in working capital. Okay, you put the heading schedule of changes in working capital. See, particulars, as usual, the comparative statement, like the same method we have to follow. Particulars, 2010 in rupees, that is no previous year, 2011 current year. So either you can write current year or previous year. Otherwise, you can write that 2010, 11 and rupees, you put the rupees in both. See, commonly we can use that the changes in working capital. I was shown in that specimen copy. Changes in working capital below increase, decrease amount. If you have you can please put it. If you sometimes you are not interested, you put it increase, decrease is enough. But changes in working capital, we are calculated. That's why we have to put it that changes in working capital is the top, and we divide it in increase, decrease, increase plus, decrease minus. But here we don't need increase plus, decrease minus, because only comparative statement we need it. So what is the formula for schedule of changes in working capital? So working capital equal to current assets minus current liability. This is the formula. So you look at that current assets. So various items appear in the the non-current items also shown, and long-term liability and long-term fixed assets also there. So what is the for schedule of change working capital means this is the formula: current assets minus current liability. See, current assets, cash in hand, cash bank. Okay. For debenture is a long term, we need not be considered, because these will appear in the either 40, nothing will be there. No need to prepare. Okay. These will be shown that funds flow statement. Okay, if any decrease, increase. But current, the outstanding means 12 months. We have to make the payment to the people, no rent outstanding. It's a current liability. Cash always hands of you, no, it's asset. A bank also asset. Payable is a liability. Machinery is a long term. We strike it out. Account receivable is a asset, and prepaid commission is a asset. Inventory is also asset. Share premium is no. Share premium is not a. It's a shareholders fund. These not will be appear. That changes in working capital and funds flow only shown that source or applications. Equity capital also source or application. So only few items will be appear. Okay. See, look at that. Cash in hand for 2010, the company having 4,000, and 2011 8,000. Definitely the asset value increase. Okay, how much increase? 4,000. You can put it 4,000. Cash it at bank 12,000, 15,000. Of course, cash appreciated. No, 3,000 increase. Account receivable, 30,000, 34,000, again receivable, little bit going, 4,000, you can put it increase. And inventory 22,000, 27,000. So stock also increase 5,000. And prepaid commissions, so only 4,000 is there. So 2011, no, decrease. So what does it mean? No, comparing from 2010, 11, any amount increase or decrease? No, 2011, nothing will be there. So prepaid commission will be decrease. We need not be paid. So, we are in good. Okay. Assets always increase, you put increase side, decrease side. But liability will be no. If you have liability increasing, you put decreasing the value of money, company's money. If the liability increasing, we put decrease side. Liability decreasing, putting increasing side. Decreasing means, favorable nature. We have to reduce the money. That means we have to make the payment or whatever it may be. Okay. Note it down. We definitely we did mistakes. In exam point of for increase means we have to put it increase side, decrease means decrease. Assets as usual increase, decrease. But liability vice versa or contravise. But liability sides, if value increasing, putting decrease side. Value decreasing, putting increasing side. Okay, note it down, please. This is also another important okay. So liability, if increasing, putting decreasing amount. Decreasing, putting increasing amount. Why increasing the value? We want arranging for fund. Liability increase means definitely we want arranging for money. That means additional responsibility having by the companies. They want to make the payments. If decreasing means definitely liability, we have to use money. That means we have to maintain. Decreasing means we already make the payment, whatever it may be. Okay. So look at that. That tally that assets total A, you put A. Only asset 2010, 72,000, 2011, 84,000. You don't add it increase, decrease, because increase, decrease will be added in loss, end of the working notes. In meanwhile, you don't add anything. You can add it increase asset side and liability side of current year and previous year. Okay. You putting two accounting bar enough. Again, you go for that current liabilities. So current liabilities, outstanding rent is there. So outstanding rent 8,000 and 12,000. See, for outstanding means previous year we want pay 8,000, and again additionally 4,000 will be increased. So increase means decreasing our values. So in our packet money, some of amount have to make the pay. So increase, the amount will be put in decrease side. Please know that important note. You can write it your own own language. So how do you understand? Okay, next account payable. For last year 20,000 we wants to pay, but this year 26,000, 6,000 rupees is increasing. So the management, they want arranging for 6,000, decreasing the value of money. Okay, so two things is only there, 8,000, 12,000. Increase means putting decrease sides. We want to pay that money. Decreasing means we want putting that in increasing side. We have that money. Okay. Total liability 28,000, 38,000. And you know that total liability with 44, no, 44. No. Working capital. You can write the working capital A minus B. Working capital means actually 72,000 minus 44, 28,000. The difference will be 44. 84 minus 38, 46. Okay. And next, you can tally the both. You can tally both the side increase and decrease. No, for 46 is the highest value. So you can put it 46 for 2010 and 11. Again, increase value and decrease value. You know that which side, no, increase value is 16,000 and 16,000. You have to add it. So if you know that fund, 2010, you know that increasing in working capital. Increasing in working capital means additional fund we need for comparing last year to current year. 2,000 rupees additionally, that is increasing working capital, and putting 2010 to 2,000 rupees, and decreasing values 2,000 rupees. You can put it 2,000 rupees. Okay, the difference value you have to tally. Okay, fine. Anybody have doubt? This is only,
Sir,
yeah,
No, sir.
in this case, there is an increase in working capital, right?
yeah,
So from 44,000 to 46,000.
yeah.
So would that come as a decrease in the
Yeah, of course, sometimes, for example, working capital 2010 having 46, and 2011, having 44. So, which means decreasing working capital. You can change that word, the balancing amount will be transferred to that particular place. Okay.
okay? So we have to balance these. That is the main
Yeah,
purpose,
yes,
right?
balancing
Okay.
figure. A balance figure, balancing figure means, additionally, increasing means fund will be raised. For 2011, 46 will there, the fund will be raised. And decreasing, why we have to put, for appreciation of capital, some of the things will be used for business. For 2,000 rupees is additionally having by your hand. Decreasing your working capital for make the settlement of other things, liabilities, whatever it may be. Okay. Vice versa. If 2010 will higher, decreasing working capital you can put. If 2011 will higher, increasing working capital. The increasing working capital or decreasing working capital will appear in the funds flow statement. Decreasing means it's a source of fund. Increasing, once again, I want to show this. Yeah, you look at that. Source means you decreasing working capital means you have the money. Increasing means we want to make the payment. Okay. Application means use the fund or arranging for fund.
Okay, sir.
Okay. Okay, this is over. 11th problem number 11 is over. Only a schedule of changes in working capital they have. No, we want to prepare. We will go for that next. Anybody have any doubt? Okay. Look at that problem number 12. Yeah.
So working capital is included in 2010 too. Why, sir?
What, ma'am?
Working capital, increase in capital,
Yeah.
2000,
Yeah, 2000.
2010. Why, sir? Already.
2010 means what?
Sir, increase in working capital 2000
Yeah,
2000
10.
rupees
Yeah.
added
Yeah,
in
yeah.
2010 add
Yeah.
0.
Yes, yes.
Why, sir?
Okay. See, you look at that 12th problem. Calculate funds from operation from the following. Calculate funds from operation from the following. See, when you are going to prepare adjusted P&L account. See, if you opening balance, both opening balance and the closing balance appear in the balance sheet, you have to prepare traditional method adjusted P&L account. I show in that some that PPT. No, but here net profit will come. So net profit, the P&L account is there. In the P&L account, definitely net profit will come. No, you can use the statement model. Note it down clearly. In the profit and loss account or retained earnings appear in the balance sheet. Opening balance and closing balance will come. You have to prepare the adjusted P&L account by debit side, credit side, by balance brought down and to balance carry down. You have to prepare it. But for profit and loss account, profit and loss account is given in the like this, given in this type. No, so we want to prepare the statement model. Statement model is suitable for this type. Okay, because why? No, net profit is given. Opening balance, closing balance, it will be, if your opening closing is there, no, definitely you can use the adjusted P&L adjusted model. But that net profit is there. How do you prepare funds, calculation of funds from operation? You put the heading particulars, rupees columns, or net profit as per the P&L particulars. Net profit as per the P&L account, given amount will be posted in outer column. Add non-trading expenses. See, non-trading means non-operating expenses, which is not related to goods and service. For example, if you are paying salary to your employee, of course, it's a operating expenses. Selling and distribution, rent, advertisement, whatever it may be, all comes, for developing our business. Definitely, we have spent some operating expenses. Okay, it will be considered. But see, capital loss, some non-trading expenses also shown that P&L account. So we here, for example, you are paying goodwill, transfer to general. This is not a concept for trading and service. So for our employer benefits or not a shareholders benefit, they can take some part of amount. So these will be, hands of whom, by the directors. So these will be, again added to the, added to the net profit. So find out that actual amount hands of the management. Okay. So here you look at that, some of the gross profit is there. Interest on investment, the sale of profit. This is not a trading profit. This is a bonus fund. For example, you have to invest in securities market. So what you get dividend or interest, whatever it may be. For sale of your furniture or land, whatever it may be, you get the money. Shareholder, no. So capital will get it. But for they wants to show on that credit side, for that their own fund have to show that credit side means, for at the time of selling the business, the buyers can think about the company having higher profit. No, so this will not be is not a part of the business. This is not a part of business income, so we want to ignore it. That means we want to reduce actual profit, actual amount will be taken part in business. Other thing will be, other thing immaterial. The immaterial will be, added and less it. Okay. See, funds from operation, no net profit, add inadmissible item, less. That means inadmissible non-trading expenses, add non-operating expenses, less non-operating income. So look at that, selling and distribution, administration expenses. These are, trading nature. Depreciation is non-trading nature. Every yearly ones. See, one more key note. No, yearly expenses shown in that P&L account. No, these are also non-trading nature. You can add it. Depreciation, loss on sale of building, goodwill written off, discount on issue of debentures. See, these will be not a part of business activities. So again, we want to. So this is no name shake. We want to reduce the money, but the money we having by the whom no business people. So the business peoples, why they want no funds from operation means actual operation, how much quantum of amount having in their hands. The remaining portion will be make the debt or arrange for loan. Okay. So amount will be there. Net profit will be 1,44,000. Oh, see, problem number 12. You can prepare the statement model, calculation of funds from operations. So, ledger, balance sheet and additional information is given. We want to prepare the ledger balance and transfer. So nothing will be there. Only what item? No, the particular important item will be there. So the particular item will be transferred to, that funds from operation account. So once again, I tell you, so calculated funds from operation, particulars, rupees. So this is statement model, not adjusted P&L account. If profit and loss account, opening balance, closing balance is appear in the balance sheet, definitely you can prepare adjusted P&L. That is what not traditional method. You will get it that answer. If you know net profit is there, no, you must prepare the statement model. It is very suitable, right? So 1,44,000 is a net profit as per the P&L account. Add non-trading items. Otherwise, item which do not decrease fund from operation but debited to P&L account. So you don't write the dialogues. Okay, only that non-trading expenses is enough. No non-trading expenses. Otherwise, it's meaningful, but you don't take the too much of the sentence. Okay, but you can write it. Add non-trading expenses. So non-trading depreciation is a non-trading. It's not like a goods and service. And loss on sale of building, it's a non-trading. Goodwill write-off, discount on issue of debenture and other things. So all only 1, 2, 3, 4 item will be there. This is a non-trading expenses added, because non-trading expenses, the money, just they have shown that P&L account for tax benefits. Again, these will be hands of that management. So 39,000 is the amount. So 1,44,000 plus 39, 1,83,000 is the amount having that. Okay. And somehow in non-trading income also shown in the balance sheet, which will not appear again in the business. For example, if you are getting dividend, so dividend will know. And one thing, for example, refunded, income tax refunded, and rent received. See, these are not appear again and again. So you have to reduce from the credit side. Okay. So less item which do not increase fund from the operations but credited to P&L account. So meaningful. Okay. So interest on investment 5,000. Profit on sale of machinery 4,000. So income tax refunded. Sometimes these also comes, income tax, refunded fund. You can, if you want, take it down or note it down.
Why it will not
Yeah, it's not a part of business. No, you are paying tax to the government.
Correct.
Yeah, it's not like a business. If a refunded, no, it goes to that owner, shareholders. It goes to shareholder account, not for business. Okay. Okay, only two things is there. You can reduce it and for 9,000 is subtracted from the 1,83,000. So the funds from operation, no, 1,74,000 is the funds from operation, business operation. For the particular year, they have money 1,74,000. The funds from operation, these amount transfer to source of money. Source means the particular year they can have some things. The remaining part will be they have to arrange. Okay. So 1,74,000 is the funds from operation. So if you know that vice versa, funds from no, not funds from, funds out, void, outlay. Outlay means deficit. We are in deficits. So mismanagement, not properly, that maintain the business activities, that unnecessary expenses and other thing will be happen for reducing the funds. But if you want any conclusion, you then need know in your examination, you can write it. Okay. Problem number 12 is over. Next, we will go for that 13. Anybody have any doubt? Ask me. Okay, I will go for that problem number
Sir, please. I have a doubt on question number 11.
11.
11. Working capital is equal to A minus B is 44,000
Yeah,
on 2010. 2011, 46,000.
yeah.
Balance is for 2000 taken in 2010. Why, sir? I can't clear, sir.
Okay. See, comparing to last year and the current year, for example, you know that current previous year we have that only 44,000 expenses. Next year, you know that we need how much? 46,000 for business.
Okay.
So the difference, it will be raising. Additionally, we need money for business. Working capital going higher. For improvisation or expansion of your business, definitely you comparing to last year and current year, you required additional fund. So for 44, that 2010, 44 is enough. But 2011, you need 46. So additionally, you need 2,000 for business. Okay. So you can arranging for 2,000 for business. That's why raising means, excess of money needed for business.
Okay.
So that's why you know that why we are putting for comparing to last year. You see for your own family expenses. If monthly you spend for 2,000 rupees, 3,000 rupees for vegetable or fruits, whatever it may be. Unfortunately, any festivals or unfortunately any guest will come. You need additional fund. 2,000, 3,000 is not enough. Again, you have to pay for 1,000 rupees or 2,000 rupees. So where we are getting if your budget is only 2,000-3,000 rupees, unfortunately, unforeseen some people we could not be predicted. Some people came to our home you have packet money, you are kept in anywhere, some money for other purpose you can use it. That is called increasing that working capital. Additionally, we required the money for developing whatever it may be. Okay. Okay, fine.
Thank you, sir.
Thank you. Yeah, next we go for that problem number 13. Hey, close one, buddy. Okay, problem number 13. Okay, we will complete 13. 14 and other thing will be discussed in the next classes. No issues. We have time, only 15 minutes left. Try to complete with 13 and 14. Okay. See, look at that from the following details. Calculate the funds from operations. See, lot of things is there. Just before I'm telling to is in what method you're going to prepare. Either traditional method or statement model. Both the method we have to follow. because here opening balance and also closing balance available. Opening balance, closing balance. So we want to get the funds from operation. Definitely you should follow adjusted preparation of adjusted P&L account by opening balance to closing balance, and you have to carry forward non-trading item in debit side and non-trading income in credit side. You can find that if debit side comes cash outflow, credit side you can get it. See statement model also, the difference between closing and opening, add inadmissible items and less uh, inadmissible incomes. That means inadmissible expenses add, inadmissible expense income less. Okay. So statement model we can follow, or either adjusted P&L account. See adjusted P&L account, no, you know that some items appear in debit side and credit side. For salary, rent. See salary, rent is here trading expenses. Okay. So you please salary you remove it because salary is a trading nature, rent is a trading nature. Depreciation, whatever it may be, any kind of depreciation on plant. It's a depreciation is here non-trading in nature. Definitely you have added to the net profit, or putting in debit side. Provision for taxation also, it's a non-trading nature, putting debit side. Loss of sale of plant also debit side. Transfer to general reserve also, it's not a part of business. We took some amount from the reserves. That means profit, general, net profit. We take 10% to 15%, 20% for maintaining reserve. This is non-trading nature. Again, the fund you have it in your hands, no, add it. Goodwill write-off, it's a fake things. Repeated things, no. Write-off, no. We want to reduce that some things. Again, you can add it. Dividend received. So received, note it down. Dividend received, not for dividend paid. Dividend paid is a expenses. Dividend received is a income. Okay, we can put it in the credit side. Closing balance, if you want follow that opening closing, no problem. Prepare adjusted P&L account, you have to prepare. If you want to prepare statement model, the difference between opening, closing, and opening balance of P&L account, 60 minus 25, the difference will be appear in the last column. Add no statement, and the discount, issue of is not part of the things. Provision for bad and doubtful debts, preliminary expenses, proposed dividend, refunded tax will come. That refunded means recovered some amount is income, but it's not business income, but this will be appear in the credit side. So you put that credit side. Profit on sale of credit side, preliminary expenses debit side, proposed dividend also debit side. See, maybe proposed dividend appear 2 times, I think so. Preliminary expenses write off also appear in 2 times. Either only. Okay. If 2 times means okay, 2 times means you can show it. Only 1 time. Sometimes repeatedly they have type. If any answer, 47,000 is the funds from operation. No. So look at that problem number 13. Yeah, prepared. No. Yeah, you please check it out. Huh? Do it yourself. not a 60,000 is a net profit. See, 1 second I will tell you. Closing balance of P&L account. Okay, no issues. See, if you want prepare the adjusted P&L account, you can use that both opening and uh, both opening and closing. Otherwise, you know that statement model, you can take that closing balance is a net profit, like, okay, closing balance is a net profit of 60,000. Add some loss and whatever it may be. 1 minute, I will show it that answer. Say preliminary expenses, write off something, they have missing. Preliminary expenses write off will come. Either please note it down. You can do it yourself. Don't copy that. So balance, the difference between closing balance and opening balance, 60,000 minus 25,000. The difference will appear in that corner. Okay, I will tell you. You can add and finally we can get that answers. We don't look at that. Please, anyone take care of that. Okay, I will tell you. You please use your calculator. Okay, statement model or profit and loss account, whatever it may be, you can follow. No issues. I will tell you statement model. Okay. See, look at that. That net profit. Sorry, not net profit, balance. The difference between closing and opening of P&L account. So 60 minus 25, what do you get? Only few minutes, no.
35. 35.
35.
Yeah, please, all of them, go to 35,000, no. Minus, 35,000. Add 35,000, no. 35,000. Add depreciation 5,000. Add taxation 4,000. And add 2,000 loss on sale of machinery. And add general reserve 1,000 rupees. Add general reserve 1,000. Add goodwill write off 2,000 rupees. Goodwill write off is over. And again you go back, discount on debenture 2,000. Add debenture. And provision for bad and doubtful debts 1,000. Preliminary expenses write off 3,000. And the proposed dividend 6,000. Okay, you see, you ignore that preliminary expenses 3,000 and proposed dividend. The same amount will be appear. Maybe I think so wrong. See, total amount, how much you got?
26,000.
Yeah, whatever it may be, you can note it down. Less. That refunded amount, how much? 3,000 rupees. Refunded tax 3,000 rupees less. And the profit on sale of building 5,000. 1, 2, And discount received how much? 5,000. See, provision for bad and doubtful debts. Please, provision for bad and doubtful debts is a part of, business loss. So you please ignore it. Yeah, it's not comes under that. Provision for bad and doubtful debts, for goods and sales, goods and service. That's why, the bad debts will come. No, this is a part of business. Okay, you ignore that. You can add it, no, add it or subtract it. Add item, no, you can remove that 1,000 rupees. You get that answer. Note it down. Provision for bad and provision for bad debts, no, for selling your goods. Debtors is there. Some of the debtors is here not make the payments. Maybe you can record in future. Okay, so it's a part of trading nature, trading expenses. You ignore it. Provision for bad and doubtful debts, you ignore it. And preliminary expenses write-off will appear 2 times, and proposed dividend also appear in 2 times. So you can get it funds from operation 47,000, I think so. Can you get it or not? Can I repeat once again?
Sure, sir.
Yeah, that 35,000 is the difference value, no? 35,000, add 5,000 for depreciation, taxation 4,000, loss on sale of building 2,000, transfer to general reserve 1,000, goodwill return of 2,000, and the discount on issue of share debenture also 2,000, preliminary expenses write off 3,000, proposed dividend 6,000. Proposed dividend 6,000. How much you got?
$25,000.
How much, sir?
25,000.
55.
25.
25.
25. No. See, once again, just wait. I tell you,
60,000,
61,000. No, 60,000.
60,000.
After adding
Get 60,000. 60,000 minus profit on sale of building 5,000. I come back, revise order. No, profit on sale of building 5,000. You less that. 60,000 minus 5,000. Again, refunded of tax. Refunded tax, how much? 3,000. And dividend received 5,000.
47,000, sir.
Yeah, you get
47,000.
47 from the book
47,000.
answer. See, in PPT, no, please don't copy that. No, it's the other way they have calculated and put 60,000, and the opening balance also I had here. So, this is the method we have to calculate it. Know the balance difference between opening closing balance and opening balance of P&L account. So 35,000. See, the something 25,000, 35, 25, 60,000, and 10, 13,000 you have subtracted, you get it 47. Otherwise, you can prepare that opening balance by opening balance 25,000 to closing balance 60,000, and that add on all the 25,000 you put debit side, and 13,000 put it credit side. The difference will come credit side. How much? 47,000. This is called funds from operation. Okay. So yeah, two method you have to calculate it. Both method you get the answers. So one thing provision for bad and doubtful debts is a part of business because you're going to sell the goods, allowing credit to the debtors. So debtor will make they not make the payments. Maybe we have to recover in future. Okay, so this is a part of business. So you please ignore that. It's not a non-trading nature. It's a trading nature. Okay. Yeah, thank you. We will discuss in next classes. How many 14 funds flow and cash flow is there. And next class we will discuss all the other problems also. Thank you. You people can leave. We will discuss in next class. Okay.
Thank you, sir.
Thank
Yeah.
you,
If
sir.
you
Thank you,
have
sir.
any
Thank you,
doubt,
sir.
you note it down
Yes,
and
sir.
ask next
Yes,
class.
sir.
Thank you.
Thank you, sir.
Thank you, sir.
Yeah. Thank you. So, thank you,
Thank you,
ma'am.
sir.
Thank you,
Thank
sir.
you.
Thank you, sir.
Thank you. Thank you. Thank you to everybody. Thank you so much for your patience.
Thank you, sir.
Yeah, thank you. Thank you. You can do it yourself. No, if you have text booklet, you please go through it.